The market is absolutely bonkers. Welcome back to the channel, guys. It's me, Adam. You are watching Steady Invest. Today, I'm going to be sharing with you guys my favorite Canadian stocks to watch this November 2020. If you're new to the channel, welcome aboard. Hit that subscribe button, smash the like button. It helps my videos get out there. As well, drop me a comment. Let me know which Canadian stocks you're watching right now. And let's get right to it. Alright, the first one on the list, we have Algonquin Power and Utilities, ticker symbol AQN. It trades on the Toronto Stock Exchange. This is one of my favorite dividend stability plays. However, it also is nice because you can see there's a lot of growth. Going back to 2009, you see the steady growth. And if you invested back then, you'd be about 500% up on your position right now. Right now, it's trading around $20.50 Canadian, and it's yielding about 4% dividend annually. Looking at the year-to-date, right before it crashed, it was trading around $22. The market crashed, and then ever since then, it was trading in the $18, $19, $17 range. Now, it hasn't run up that much that it's not good value anymore. It still is, but it's tough because it was trading so long for those prices. And who knows, maybe in the short term, it goes back to 18, 17, or who knows what. Looking at their balance sheet over the last 4 years, you see that their assets keep climbing and climbing. So do their liabilities, but at a much slower rate. And looking right now, they have just under $11 billion worth of assets, and their liabilities are about $6.5 billion. So a pretty healthy margin. And their market cap is at about $12 billion. So in my opinion, a really solid, stable company with a lot of room to grow. I'm also really bullish on the renewable energy sector. Which brings us to stock number 2, and this is my favorite Canadian stock. We have Brookfield Renewable Partners. Ticker symbol BEP.UN on the Toronto Stock Exchange. And this is not to be confused with Brookfield Renewable Corporation, ticker symbol BEPC. Now, why is this my favorite Canadian stock? Because I believe it encompasses value, growth, and dividend all in one. Like Algonquin, this one's also run up so much in the past few months, making it a lot tougher to buy. Just back in September, it was trading at $60, and now it's gone up about 21% since. That being said, though, unlike Algonquin, this one has a lot more growth potential. It's trading at just below a $24 billion market cap, and I believe it's one of the best pure-play renewable energy stocks that you can buy. Hold on a second, Adam. You said this is your favorite Canadian stock, but if you look here, the headquarters say Bermuda. What's going on? Brookfield Renewable is just a subsidiary to its parent organization, Brookfield Asset Management, which is one of the best managed, well-run companies in the world. And if you look at the chart, besides the market crash back in March, it's only gone up since 2019. I'm not saying it's immune to a pullback, of course, like every stock it is. However, renewable energy is the future in my opinion. And the sector is going to be growing and growing over time. And looking at the parent organization, they have so much cash. They have so much cash that all the subsidiaries will be more than fine. Again, growth, value, and dividend sign me right up. I'm pretty happy with my position right now. That being said, I'd like to buy more if it dips to about 65 or so. That being said, though, it is one of my favorite companies, so I might just add more even if the price doesn't go as low as I wanted to. Alright, next on the list, we have Telus, ticker symbol T on the Toronto Stock Exchange. So in Canada, when it comes to telecoms, we have 3 main ones, the big 3. We have Rogers, Bell, and Telus. And of the 3, I like Telus the most. It's currently yielding about a 5% dividend annually, with a PE ratio just under 20, so that's pretty fair. And I expect to see growth over time just with their health initiatives and expanding, especially with 5G coming around the corner as well. And just like with Algonquin, I think it's a steady growth play, as well as the dividend also being really stable. Again, people are going to be paying their cell phone bill no matter if the world's ending. So, all right, next up, I believe this is one of Canada's best growth stories. We have Cargojet, ticker symbol CJT on the Toronto Stock Exchange. And I actually bought and sold this one a few times. I think I had shares at like 160. I wish I never sold, and this one has been an absolute beast since the crash. So you can see over time it's grown quite a bit, but look what happened this year. After the crash, alone it went up 177%. And it's still just going up. Who are they? They're Canada's #1 cargo airline, only national overnight air cargo consolidator, and they represent over 90% of the domestic overnight air cargo lift available in Canada. And as you can see, everywhere flies to everywhere. And this is what's really important. So approximately 75% of domestic revenues are under long-term contracts. And look at those names: UPS, Canada Post, DHL, Purelator, FedEx, all the big names. And look at that. And look at their alliances, 54 international alliances, and look at all those recognizable names. And they have some serious market share. So only national network that enables next day service for courier industry to over 90% of Canada's population, a strong competitive advantage. Again, this one's tough right now. It's trading at about $3.73 billion, so it's still pretty small, but there's a lot of room to grow over the upcoming years. So it may not be a bad buy if you're looking at it in the long term, but this one can easily pull back in the short term. Alright, next up we have Lightspeed, ticker symbol LSPD. It trades on the Toronto Stock Exchange. And this is an e-commerce play, and this company has a lot of room for growth. Its current valuation, we're looking at about a $4 billion market cap. And ever since the crash, we've seen this one grow as well, about 200%. A lot of people deem this the next Shopify, and with good reason, because it works and is gaining more and more customers. Customers increase their GTV, gross transactional value, by more than 20% on average in their first full year on the platform. It's used in 100 different countries worldwide with 51% year-over-year revenue growth in first quarter of 2021. Over the past few months, we've seen a bounce between the low 40s and the high 40s. Anything around 40, I'd be happy starting a position. But this is also a stock that I wouldn't be surprised if it ran up like 10 or 20% over a short amount of time. All right, next up we have Pembina Pipeline, ticker symbol PPL, trades on the Toronto Stock Exchange. Talking about a beaten down sector, I believe there's a lot of value when it comes to the stock. And this one crashed hard. So right before the crash, it was at $53 and it dropped 70%. However, it did recover 125% at one point. Since then, it's dropped another 26%. So it's been pretty volatile. That being said, I think this is a really good value dividend play. It's currently yielding an 8.8% dividend annually at about a 16 price to earnings ratio. And I think of Pembina as a better Enbridge. They're both well-diversified distribution companies of both natural gas and oil. But what I really like is Pembina's fee-based cash flows don't have direct commodity exposure, implying that its dividends are safe. So what I can see is that its dividend is safe, it's a high dividend, and plus the stock price has a lot of room to recover. Additionally, it's also trading at a 16 price to earnings ratio and a market cap of $15.5 billion. And when I look at Enbridge, I don't see as much of an opportunity. And it's trading pretty richly at a 38 price to earnings ratio. With Pembina, I don't know what's going to happen in the short term at all, but the lower it goes, the more of an opportunity I think it is. Next up, we have TD Bank, ticker symbol TD on the Toronto Stock Exchange. I'm going to preface with this, all the Canadian banks are good in my opinion, but TD is my favorite. Like Brookfield, I think it's a solid mix between growth, value, and dividend. The virus really hurt the financial sector. Right now, you can pick up shares at the same price you could have 4 years ago. And it's trading really cheaply with a price to earnings ratio of about 11. Like all the Canadian banks, the fundamentals are absolutely pristine. However, with the economy the way it is, anything can happen in the short term. However, in the long term, TD is a huge winner, especially if the price keeps going down. Next up, we have OpenText, ticker symbol OTEX, trades on the Toronto Stock Exchange. And this is a software company based out of Waterloo that's seen a lot of growth over the last 10 years. That being said, a lot of big names use it. For instance, Google, the San Jose Sharks, Switch, the Government of Canada. And what's interesting is they're a tech company that also pays a pretty decent dividend at about 1.82%. So definitely do your research. This one's an interesting play. And in 2020, yes, I think Blackberry might be a buy. Because if you bought in 2007, you would not be happy right now. Down 97%. So why Blackberry? They have no more phones out there. And that's true, they don't have any more phones left. So welcome to Blackberry 2020 when they focus on cybersecurity. And this is pretty speculative still, they haven't proven anything yet. Looking at the 5-year chart, it's been trading sideways, and then ever since 2018, it's been in a downtrend. So this may be a decent buy right now, as the world is transitioning to work from home, cybersecurity, cloud services, etc. It was trading at about $8 before the crash, went down to about $4, and then now it's been trading around $6, $7 ever since. The way I look at it, again, it's a decent buy right now. The closer it gets to $4, the better of an opportunity it becomes, if the company does in fact succeed with their cybersecurity products. Next up, we have my favorite REIT, Interrent Real Estate Investment Trust, ticker symbol IIP.UN, also trades on the Toronto Stock Exchange. And I look at this one as a really slow, steady growth opportunity, extremely good value, and a decent dividend. So what Interrent does is they take properties, they fix them up, and then they rent them out. If you bought back during the housing market crash in 2008 at $1 until the peak this year, you'd have made 1,500%. And after the market crash in March, you'd be up about 970%. The lower and lower this gets, the more of a growth opportunity it looks. And when I say this is a good value, we're trading at a price to earnings ratio of just over 4. As well, a dividend yield of 2.63%. Now here's the weird thing. Ever since the springtime, the real estate market in Canada has been absolutely on fire. But Interrent doesn't show that. And a lot of people are concerned about that right now. I'm not. Because as we know, the stock market does not reflect logic. And this one's going to keep going lower until it doesn't and it never sees those lows again. That's just my opinion. And when the market crashed, it hit a low of 1137. And we can see just last week, it bounced off 1120. So it's possible that the low 11s are a support level for the stock. So again, with a price to earnings ratio of 4, and if you believe in the residential real estate market long term, I think this one is extremely good value. While we're talking about real estate, I don't want to get too in depth right now. I think Smart Centers and REI.UN
are both good buys as well, because in the same way commercial real estate has been beaten down. But as the economy recovers, I can see the share prices also recovering too. And while you wait, you can collect a 9.73% dividend and 8.64% respectively. And the last stock we're going to be talking about is a very good food company, ticker symbol VERY, and it trades on the Canadian National Securities Exchange. I've made a video on them already and why I'm bullish on this company, but be very careful because it's run up so much in the last few weeks. And short-term traders may be taking their profits at any time. Just straight up price manipulation. That being said though, nothing will surprise me about this stock. It could drop 50%, it could go up to 100%, or it could trade sideways for months. Me personally, I have made money on it, but I'd be so happy to pick up more shares around the $2 mark. But who knows if it'll get down there again.
And those are my favorite Canadian stocks, November 2020. And here's the crazy thing. Ever since last night when I recorded, the entire market's gone up. Lightspeed went up over $50. Absolutely crazy. I'm going to start making my next video right now. Again, welcome to the channel if you're new. Hit that subscribe button, smash the like button as well. Drop me a comment. Let me know which Canadian stocks you're watching right now. And if you're in Canada and want to start trading, use my links below. We'll both get free money. Otherwise, I'll see you guys in the next video.